Everyone, thank you so much for joining. It's a privilege to be here today, and I'm so excited. I hope you are too. Thank you so much. And I want to specially say thank you to our trainer for today, Mr. Salah. And it's a pleasure to learn at your feet today or in your class. Maybe I'm talking like Mr. Emi is the rabbi. Because it's at the feet of the rabbi that you learn. All right. But when it comes to accounting, Mr. Emi is a rabbi, truly. He's an exceptional person with great skill and impressive resume. So I will appreciate if Mr. Emi, you can unmute yourself if you can hear me. Please unmute yourself and let's see your face too. I'm sure. All right.
Good
Thank you so much. Wow, I like the fact that your video is very clear. Though there's a light behind you, so if you can tilt your camera a little away from that light, help. Yeah.
Is it better now?
I think so.
Okay.
All right. Thank you so much. And I would like to introduce Mr. Emi Salah once again. He's a very impressive, young, but humble man.
Thank you.
You know, thank you for laying good examples for the youth, because when we see the things you've done, I know so many other youths, they're also encouraged to be like, okay, I have to do something with my life. I have to make sure, I'm doing well and I achieve my goals. It's obvious that Mr. Adeyemi is a goal-getter who sets goals and achieves them. And when I see young, brilliant mind like this, I'm fascinated and I'm drawn close to, to learn from them. So today we'll be, talking to, or Mr. Adeyemi Salah will be speaking to us and training us on the issues of accounting. This particular class is for business owners, and we desire that business owners, they will be able to learn basics of accounting, because if they don't keep their records well, there is no way they can call accountants or auditors to help out later on. So when they do the right thing, we'll be able to, make sense. Professionals will be able to make sense of their business accounting. So make sense of their accounting, and he's a graduate of accounting from the University of Ilorin. He qualified as a chartered accountant as an undergraduate, and that's impressive. This is a program that even people who are graduates for many years, they still find it so stressful. That's not his own testimony. His own is unique, and we are proud to mention it every time. And he's qualified, as a chartered accountant, and has trained so many chartered accountants all over the world. And he is a senior tutor at Springboard Associates, and he has more than half a decade of experience lecturing as ATS of UA and ICANN lecturer. He worked as auditor at one of the top 4 financial companies in the world, that's KPMG, and also as auditor in one of the biggest companies in Nigeria, that's the Dangote Group, and he's a managing partner as the Springboard Associates. He has so many, awards, scholarships, and if we continue to talk about them, that will be the only thing we'll do today. So I'm so proud of you, sir, and of all the work you have done. You've been a strong support of the brand Life Founds, and we are doing whatever we are doing because you are cheering us on. So today, after listening to my voice, the next voice you will hear is that of Mr. Adeyemi Salah. So you can have the floor, sir. You're welcome. Thank you.
Thank you very much, ma'am.
Okay.
I really appreciate this opportunity.
Yes, I can hear you now.
Okay. So basically, we'll be discussing business and how to achieve profitability.
So I said we'll be discussing business and profitability. basically. The sole aim of any business is to make profits. If the aim is not to make profit, then it is not business. It becomes a charitable enterprise if the aim is not to make profits. So basically, business involves provision of goods and services for monetary consideration. When you say you are involved in business, it is either you are selling goods or you are rendering services to people. So that is basically what we mean by business. Then I did a research before this class, and also I checked the same thing last year. I still have the same results. Over 75% of businesses fail in the first 5 years. And this has been mapped down to not being profitable. Most of them, after they start for a year, 2 years, capital is gone. Some try a lot, they last to the third year, but most of them don't last to the fifth year. So statistics shows that only about 25% usually scale through the first 5 years in business, and majorly due to lack of profits and running out of capital. So that will form the introduction for this class today. Now that we understand what business is, buying and reselling of goods or offering of services, basically, this class will focus on how SMEs can achieve profitability. So I'll be sharing a slide with us, and we're going to be walking through that slide on how to achieve profitability. So I want to believe you can all see the slide now. So we'll be looking at what are the factors that make business to fail first before we look at their profitability. The first factor we have outlined here is lack of business entity concepts. Now, business entity is an accounting term. Business entity says that the business should be separate from the owner. Many times, many small business owners, small and medium-sized businesses, the owners are not separate from the business. And this factor is killing a lot of businesses. Let's use example, you are selling clothes. As a business owner, you are supposed to be different from your venture. So if you yourself need clothes, you are supposed to buy clothes from your shop, not just pick clothes. That is what entity concept says. The owner should be different from the business. As the owner, you also, if you need something, buy. Because if you keep taking and taking and taking, there's something called drawings in accounting. Drawings is what the owner is taking out of the business. If you keep drawing out of your business, then you start eating into your capital. So lack of entity concept is the number one reason why many SMEs are failing in their first 5 years. Then the second reason why SMEs are failing is poor costing knowledge. Many SMEs don't have good knowledge about costing, ascertaining the cost of what they have purchased. Many people only know, I bought this clothes for 5,000. I will sell it for 6,000. I will make 1,000 naira gain. Now, what they fail to realize is that aside from you just buying the clothes, there are other costs that you are incurring. You will spend transport to go and buy the clothes. If you are selling in a shop, you are going to pay rent. You will pay for lights. You will put things in the shop. All those other costs, they are not being factored in. So poor costing knowledge and poor pricing techniques, the two of them, they work hand in hand, and it really affects a lot of SMEs. The next one we have here is mixing friendship with business or mixing relationship with business. as a business owner, you should not be emotional about business. Now, what I mean by emotional, people should not be able to play on your emotion. What you sell to an outsider for 5,000, you are giving it to a family member for 2,000 naira. Then that is already eating into your profitability. So mixing friendship with business is another factor that causes business failure. The next point is lack of innovation. The next point is lack of innovation. Innovation simply means bringing up new ideas. As a business, if you fail to innovate, you will soon find yourself out of the market. When they sold Nokia to Microsoft, the CEO of Nokia said they did nothing wrong, but they just found themselves out of the market. Actually, the only thing that Nokia did wrong was that Nokia failed to innovate. The need of the consumer was shifting, but the company refused to shift with that. As a company, if you do not shift the need of the consumer, you will soon find yourself out of the business. And the last one on the list is poor bookkeeping, not keeping of records, or let me say poor keeping of records can make it look as if the business is not profitable. So we'll now focus on the main business. How do you achieve profitability in your business? Before I go there, I would like to differentiate between revenue and profit, because many people usually mix these two concepts together. Revenue means sales, the money you get from selling. I sold this piece of material, this cloth for 6,000. That is the revenue. Now, because you have sold the cloth for 6,000, that does not mean you are gaining 6,000. So revenue is different from profit. Your profit is revenue minus cost. You have to, aside from the cost of you buying the clothes, you have to remove all other costs associated with that item. So revenue minus cost will give you your profit. It is not revenue that keeps you in business. It is the profit you are making that keeps you in business. A company can be having huge revenue and still be having loss if they don't control their costs. So revenue does not keep any company in business. It has to do with the profit. Localizing this to SME, how can SME achieve profitability? Number one, separate yourself from the business. Like I said earlier, entity concept. You see on that slide, I will stop spending business money. Stop picking things from the business without paying. And stop using your business items as gifts. I used to have a friend that runs a restaurant. He himself, if he wants to eat in the restaurant, he is going to pay, because I told him about the business entity concept. Let us know the real profit of this business. So for you to know the real profit, you have to stop taking from the business. At the end of the month, at the end of the year, when you calculate your profit and you see that you have enough profit, then you can move out of your profit. But without checking your profitability, stop removing the business money. If you are buying and selling, once you spend your capital, then you are out of business. And capital is the money we are using to run the business. That's what we mean by business money. So maintain a separate account for your business. Now, banks operate corporate savings accounts. So if you don't want current account, banks are opening savings account for businesses now. So open a separate account from your business so that you don't mix your own personal money and business money together. So the first point, if you want to be profitable, is to separate yourself from the business. The second point is to get adequate costing knowledge. You need to get the cost of your items right. The first cost of an item is the purchase price. How much are you buying this item from the seller? Let's say you have made your order from Lagos. How much does those items cost? That's the purchase price. The person you are buying from, if the person gives you any trade discount is given because you are buying plenty. If you are given a trade discount, you will subtract that trade discount from the purchase price. So the first thing you must ascertain is the purchase price. Now, those goods will move from Lagos to Kwara State. There will be transportation costs. Your transport cost is part of the cost of what you have purchased. Then other direct costs, any other money that you spend to bring the goods to your shop is what we call other direct costs. Also, if you pay value added tax, I want to believe all through the week you have been taught taxation. If you pay value added tax, you also add that to your cost. So the purchase price, your transportation cost, any other money you spend to bring the goods to your shop, plus the tax you have paid on the goods, everything will form the total cost of goods. If you now divide total cost of goods by the units, that will give you your cost for one. This total cost is for everything you are buying. If you divide it by the quantity, that is, how many did you buy? Let's say you bought a bill of clothes and the bill has 100 materials. Your total cost divided by 100 will give you cost per unit. So after ascertaining the cost of that item, the next thing is for you to determine a pricing template. In determining a pricing template, you don't use only the cost of the goods, because there are still other costs that you will incur. We usually call them administrative overhead. So before you design your price, we have already ascertained the cost of the goods. You will now add all your administrative costs. Under administrative costs, we have the rent. You must have rented a shop. Rent. If you have staff, you will pay salary to your staff. Fueling, you run generator. You will pay PACM bill. Consumables. Consumables means your cleaning materials, etc. So the cost of rent, your staff salary, fueling, lighting, consumable, part of fixed assets consumed during the year. Part of fixed assets consumed during the year. Now, what do we mean by this? You cannot do business in an empty shop. If you are running an office, there will be furniture in the office. There will be equipment like fan, like AC. Now, one of the mistakes people usually make is all these costs to be charged at once. No. The cost of your fixed overhead should not be charged at once. What we do in accounting is, let me use furniture for an example. You have put table, chairs, and the likes in your office. The cost of the tables and the chairs should be spread over like 4 years, because it's expected that those furnitures will last for like 4 years. If your furniture, let's say your own furniture will last for just like 2 years, then the cost of furniture should be spread to 2 years. That is what we mean by part of fixed assets consumed during the year. So the technical name for it is depreciation. You don't use up all your asset at once. If you buy fan, the fan is expected to last for more than 1 year. So it will be wrong for you to charge the cost of fan to just 1 year or to just a month and say you are not profitable. So when you add the cost of goods to all the overhead, it will now give you total costs. After getting your total cost, you need to ask yourself, how much profit do you want to get? In determining your profits, you need to check the competitive market price so that your price is not above what they are selling at the market. When you add your desired profit to your total cost, that will now give you the revenue, the total revenue you want to get. Total revenue divided by quantity will now give you the selling price of each one of them. This is for a company that is trading, buying and selling. If you are into service business like the hospital, you will not have total cost of goods sold, or total cost of goods rather, if you are into service, you are not selling any goods. So if you look at the slide 8, the point 3 in slide 8, therefore service business, instead of having cost of goods, what we'll be having is cost of all inputs used. So the hospital, for an example, they will use drug, they will use drip while treating the customer, while treating the patient. All the total cost of everything they used in treating patients will give us total cost of the inputs. Now, every company incurs this admin cost. Your total cost of input plus the admin cost will give you your total cost. Then adding your profits, you get your revenue. Slide 8 sheds more light on what I have in slide 7. The first thing there is, in determining your profit, consider the market price. It's very important that you consider the market price so that your price is not above what customers can get in other places. Because of just 100 naira, customers can shift base.
Sorry, Mr. Deyemi.
Yes, ma'am.
Sorry, Mr. Deyemi. Your slides were so small on the screen. I think you're sharing from a phone. So I'm trying to share from the computer, but I don't know which slide to share now.
Slide 8.
So am I sharing the right slide now? What you're seeing?
No. No.
Okay. So let me go back.
Slide 8.
Coming. So am I going back? Okay, this is conclusion. Is this okay? Or I should
Yes,
still go
yes.
back?
No. That same slide.
Okay,
The
this is
last
okay,
one.
right? Okay.
Move to the next slide, ma'am.
I'm the one telling you. Okay. This one. Is it okay
Yes.
now? All right.
It's okay,
So
yes.
please, when you need me to change, just tell me next slide. So I'll change for you.
Okay.
All right. Thank you, sir. So you can continue.
So looking at this slide, the first thing you have is, in determining the profit, consider the competitive market price. Like I said earlier, you need to check how much are your competitors also offering these same services that you are offering. Because if small price difference might not make them to move, but if the price difference is too much, then they might move. There is only one possible way for you to charge high price and still retain your customers. We call that product differentiation. You must be able to convince the consumer, the customer, that your product is different from what they can get in other places. That is what will still make them to want to pay more. For example, Coca-Cola was sold for 150 before, while others were going for 100 naira. They were using product differentiation. telling you you cannot compare Coke with other products. That's the only way you can charge. If your product is not different from what others are offering, then you have to make sure that your price is at the same level with them or slightly different. Then we have some businesses might not be able to charge all customers the same price. We call this price differentiation. In some businesses, it is not possible to charge a fixed amount for everybody. For example, you are selling clothes. Some people have very good bargaining power. They will bargain. Now, if in your own business, it is not possible to have a fixed price, what you do is that you should have in mind your overall revenue. Let's say, based on the last slide, you have determined that for you to make profit of 50,000, for example, for you to make profit of 50,000, you have to make sales of 120,000 naira from those items. Then you have that at the back of your mind. So when you are cutting from one price, you should get it from another. So same item, if you're able to sell it for 5,000 to one person, then you should be able to sell it 6,000 to another person. Just have at the back of your mind the total money that you must make from the sales. That's what you do if it is not possible to have a fixed price. If you go to the mall, they have a fixed price at the mall. You pick what you want and you pay the amount. So for them, it is easy to say revenue divided by quantity to get cost per unit. Hospital services, for example, you can't charge everybody the same price. So in that case, once you have your total revenue at the back of your mind, that will influence how you charge price so that you don't drop your price too much. Sometimes SMEs drop price so much because they want to sell. And the goal is not just to sell. The goal is to sell and still be profitable. And the third slide, for the third point there, for service businesses, like I said earlier, the first thing you get the cost of your inputs. A service business, you don't do the same thing for everybody. So you cannot charge everybody the same amount. What is advisable to do in services business is that structure your activities. For hospital, they can have chemotherapy, they can have malaria treatment, orthopedic, pediatric operations, and the likes. So when you can structure your operation into like 5 or 6 segments. So when after structuring it into 5 or 6 segments, all your overhead, that's the admin cost that I said earlier, divide your overhead to these segments based on how it is being used. For example, if you have more patients coming in for childbirth, that means more of the overhead you have to go to childbirth. If you have more coming for chemotherapy, then more of the overhead you go to chemotherapy. It's best shared based on number of patients in each of the segments. So after sharing the overhead to the segment, it will be easy for you to ascertain the profitability of each of the segments. So let me use childbirth, for example. Childbirth. The first thing you have is the cost of inputs. What are the things you use to ensure safe delivery? Then the share of overhead. Share of overhead for the childbirth section. That will give you total cost for childbirth. Then how much profit do you want to get per month from childbirth? We can best you put it in percentage. Let's say we have a total cost of 100,000 incurred in childbirth. The company can desire a 30%, a 50%, depending on your industry, in profitability. So if I want 50% profits, that means the total money I must get from childbirth is 150,000. That will influence how you will charge patients that come for childbirth. You have already made a projection. In this month, there will be 5 deliveries. Now you know all the money you will spend on the 5 delivery is 100,000. Then you want a profit of 50,000. So at least you must get 150,000 from the 5 deliveries. So 150,000 divided by the 5 deliveries will give you 30,000. This 30,000 will be like the basic. Other amounts will now be added based on the complexity of the delivery. Some people, they just stroll in and they stroll out, while some people take more time. So the complexity will now determine the add-on. But you already have a basic amount in mind. You already have a basic amount that you charge for delivery. So that is what we mean by that. Let's pick another service business. Let's say teaching, for example. For teaching, what are the cost of your inputs? You buy marker. Basically, marker is what you use because the staff cost will be charged to overhead, and all your utility bills will be charged to your overhead. So basically, for a school, your cost of input will be cost of marker, instructional materials, every other thing you use in teaching the students. So the cost of the inputs plus your overhead will give you your total cost. For school, it is based done per term. So it will give you your total cost per term. The total cost per term divided by the total number of students will give you the basic amount you should charge. Then the other add-ons will now depend on the class they are in. Or if you don't want to follow that, like we did for the hospital, let's say a primary school, you can divide the school into primary 1 to 6. Divide the overhead to the classes based on number of students in each of the class. So that will give you the total cost per class. So total cost per class, add your profit percentage to it. That will give you the amount that you want to realize per class. It will help you to form a basic amount. Then you can now put add-ons to it. The minimum amount you are expected to charge is the amount that can help you to cover your costs and put at least a little profit. Then every other thing is now add-on. So after getting your price right, if you don't get your price right, you have issues with profitability. It is either you underprice or you overprice. When you underprice, it means you are not charging enough. You are just selling. So you just be selling, you'll be making the money, but you're not profitable. At the end of the month, it's as if there's a hole in your purse. That is what happens if you are underpricing. You simply did not consider all your overhead when fixing your price. You only consider the amount at which you bought the goods. That's one of the main factors that usually cause underpricing. Then for overpricing, you are charging them way more. Though the company will be profitable initially, but when another person comes offering the same service at a lower cost, then you start losing your customer to them little by little. That is what overpricing can cause. So it's essential that we get our pricing right. So as a recap, I said your price must cover the cost of the goods, the overhead, and the profits you want to achieve. That should give you the minimum pricing, the basic price. Then you can start adding more based on the level of care you are giving. So after getting your pricing right, you now need to check if you are making profits. So this works for a trading business. You have your revenue. Revenue means your total sales. How much did you make this month? That is revenue. Opening inventory. What do we mean by opening inventory? They are the goods that you have at hand at the beginning of the month. What you have at hand is called opening inventory, plus what you purchased during the month. So you will get this from our slide 3. That's the cost of the goods. The cost of the goods is the purchases, what we did in slide 3. Then what you have at the end of the month is your closing inventory. How will you get your closing inventory? It's very simple. Like I told you earlier, you will divide your purchases by the number of items. That will give you cost per item. So if I spend 250,000 to acquire a bill of clothes that consists of 100 clothes, that means 250,000 divided by 100 will give me 2,500 for each of the clothes as the cost. At the end of the month, if I still have 20 left, the cost of the 20 will now be 2,005 times the 20 I have left, which gives me 50,000 naira. That will be my closing inventory. It will be wrong for you to minus all your purchases from your revenue, ignoring what has not been sold. What has not been sold is still with you, it is still with the company. That is why we have to less it from what we have purchased. So our opening inventory plus purchases minus the closing inventory will give you your cost of sales. Your revenue minus the cost of sales will give you your gross profits. When you now minus your admin from the last slide, your total of all your admin, if you now minus all the admin, you have your profits for the month. So once you are achieving profitability, it means you are still in business. But if your business is showing loss, when you keep having recurring losses, then you need to look inward. There is a problem with the business. Next slide, ma'am. Another way to be profitable is to be innovative. Like I said earlier, if you are not innovative, you will soon be out of business. Innovation helps you to get good profits. I did an analysis of the Nigerian market, and I noticed that the people that make profit most from an item are the first set of sellers. So if you are innovative, if you are able to bring up a new product, you will have made your profits before other people rush into the business. Because one thing about the Nigerian business environment, once a person starts a business and they can see that it is profitable, every other person starts running into the business. But the people that make money most from the business are the first joiners. So you must be watching out for the need in your environment. I read something about the company that first brought in this selfie stick. He said the guy went to China and he saw it and he was impressed and he imported a lot of containers. He sold everything. They only did that business for like 2 months before everybody joined the business. So in that 2 months, they already made their own profits and they left the markets. So innovation helps you to get a lot of profit. The biggest gainers are those that join the market first. Because before every other person's eyes you open to that business, you have already made your own money. Then number 6, give discounts to drive sale. There's something called trade discount in accounting. You give that discount so that the person can buy more, because we believe that turnover brings more profits. Let's say somebody wants to buy 3 items, but if you remove like 150, the person will buy like 6. It's better for you. So I've seen companies will tell you, I bought something recently, and the person said, if I'm buying less than 10, it is 1,000 naira. But once I'm buying more than 10, I'll get it for 850. I was forced to buy more than 10. So that will also drive sales and ultimately increase profitability. So it is good to always give discounts to encourage impulse buying. So you can tag a condition to that your discount. If you are selling an item for 500, you can say buy 5 for 480, for 470. I can tell you it will drive more sales, because discount has a way of attracting customers. Then number 7, cut off unnecessary cost. As a business, you need to look inward first. If you are incurring any unnecessary cost, you need to cut them off if you want to be profitable. If your business is still small, if it is what 2 staff can handle, then you don't need 3, 4 staff. You need to cut down on unnecessary cost. If you buy 5 before, you can improve it to like 7, 10, so that you can spread the transportation cost. You need to find ways of cutting off unnecessary costs. At the early stage of the business, if you want to be profitable, you only need to incur costs that are extremely necessary for the business. So, and look at your cost 1-1. What are the things you can do without? All the things that you can do without, you need to cut them off. That is what we mean by unnecessary cost. All the things that the business can survive without. If you reduce your cost, it will help you to have a competitive price. It will also improve your profitability. And the next point I have here is seek alternative markets. Before the lockdown, I had a meeting with my team, and we're discussing how to set up online classes. We did not even know that we'll be forced to do full online class. Well, we said we are going to do 2 classes to test run. You must always see, though we all have the traditional markets, the customary markets, but you must always check for alternative markets. You are selling clothes, for example. Have you tried the digital markets? That will also help you to drive sales. Aside digital market, have you tried using distributors? I know someone, what she does, she doesn't have a shop for selling clothes. She only goes to the market, take pictures of clothes, of shoes, then shares it on the internet, advertise with it. If you want, she goes there to get it and sells to you. So you need to find out your business, what alternative markets do you have for it? Can you do it online? Aside online, can you use distributors? If you look at Captain Cook Business, for example, they are using the idea of distributorship. I don't think there is any area in Ilorin that you will get to, you will not see a Captain Cook shop. So you don't just stay in one place. If you want to drive your sales, aside from your normal market, you must be able to ask yourself, in which other way can I sell my products? If your business has to do with crowd, there is NYSC camp in Kwara State. Have you been there to advertise your products? So you just need to check out for alternative market aside from your regular markets. Next slide, one. Okay, before I conclude, I also like to state this. When you start a business, you don't expect that business to be profitable immediately. No, it takes months. The first thing you are doing as a business, you are trying to gain trust of customers. You are new, they don't know you. So you are first trying to gain their trust. So profitability start kicking in. Let me say, let's use January to December as an example. From January to June, you might only just be breaking even. That is no profit, no loss. But towards the second half of the year, then you start seeing, whilst your business progresses, the profitability starts increasing. So when you are running a new business, to enter the market, it is good to use what we call price penetration. What do we mean by price penetration? You simply charge a price that is a little bit lower. That means your profit will be reduced a little. So at the initial stage of your business, you don't expect huge profit. You have to lower your profit a bit, and which will help you to lower your price. That will help you to get the confidence of the customers. Then you can start increasing the price little by little as you progress. Though we are saying use price penetration, that does not mean that you should charge a price that will not help you to cover your costs. Remember, I said earlier that the minimum price you can charge is a price that will help you to cover your costs. Recently I did a study on the OPay business model, and I told a colleague that this business model was not made to survive because they were charging a price exorbitantly low to cover. The price was not even enough to cover their cost. They were covering the cost from their other businesses. So when they now increase the price, almost all their customers left. You don't do your price penetration like that. When you are trying to do price penetration, make sure you are covering your cost and you are making a little profit, such that when you start increasing your price, your customers don't leave. Example of a business in Ilorin. Recently, I was analyzing the item 7 business, and I was like, they usually increase the price every time by 50 naira. Before it was 350, it moved to 400 to 450 to 550, I think, then to 600. As a customer, you tell yourself 50 naira is not so much. But if the price should move at once from 350 to 600, almost all the customers will run. So you must be careful when using price penetration, and when you start increasing your price, you must do it little by little such that it does not affect the customers. If the gap increase in your price is too much, then customers will run. So conclusively, we say apply cost control measures in your business. Do competition analysis. As a business, you don't take eyes away from your competitors. You must always watch what they are doing. In business, it is allowed to learn from your competitors. So you must always watch what they are doing so that your own price is not too different from them. Give discounts to drive sales. Provide what customer wants. That's another way to be profitable. If you are not providing the things that customers want, then your goods will only be in your shop. If you are providing goods or services, make sure it is the need of the people. In fact, your business is supposed to be a response to an identified problem, to an identified need of the people. So make sure you are providing what customer wants, because that is what they will buy. You are not in business to provide what you like, because you are not the one that want to buy it. Focus on your strengths. And lastly, increase your advert to drive sales. It has been proven that advertisement is directly correlating with sales. So when you improve on your advert, it will help you to drive your sales. Advert creates the awareness of your products in the mind of the customers. So when you keep advertising, recently a new restaurant came to Ilorin, that is Charcoal. I knew about Charcoal from advertisement, but I listened to radio. So every time on the radio, I'm always hearing about the adverts. So even without going there, it has created the awareness of that restaurant in my mind. That is what advert does. So thank you very much for listening. So I'll be entertaining questions. Over to you, ma.
Okay, so if you have any question for our speaker, you can send it in the chat box. And we want to sincerely say a big thank you to you, our dear trainer, Mr. Adeyemi. You are such a fantastic trainer. And it made it so easy for us to, to understand these things. And what we want to say is that our business, sorry, someone, okay. Our business will definitely do better after now, because so many of us, there are so many mistakes we are making in our businesses. And sometimes we don't even know that we are making these mistakes. But today you've been able to point it out to us that we need to pay attention to every cost involved in our businesses. So I'm just going to do like a mini recap while we wait for people to send in their questions. If you want to ask your question, you want me to give, give you the floor, you can unmute yourself and ask the question, or send a sticker raising your hand up that you want to ask a question. You can unmute your video and raise your hand up so that we'll give you the floor. So something very critical that is a take home for me from today's training is that many of us, we need to pay attention to other costs apart from the direct cost related to what we are selling, either goods or services. So from the example you gave of someone that bought something from point A to point B, many times we'll just buy an item and we'll say, okay, if this item I bought for 2,000 naira, I want to sell it for 3,000 naira, 1,000 is my gain. But we don't consider so many tiny other details. And at the end of the day, sometimes we find out that the business is not doing well and we are wondering which part of the enemies is against us. Is it from the mother side or the father side? Which many times it's not really these people. In fact, they are busy with their own lives. It's just because we lack accounting information, accounting understanding of, how to attend to our business accounting and finance. So from what you have said, he said if we are buying from one point A to point B, we should not consider that cost alone. We should consider the cost of what we bought, one. We should consider the cost, the price, the cost of transportation that moved it from point A to point B. We should consider taxes involved, because sometimes, especially for those who do buy and sell, as you are moving from point A to point B, they are telling you you have to pay tax, to enter the market. You have to pay tax. The transportation guy will tell you have to pay one special tax before you move past one gate. You have to factor all these costs in, because these things are taking away money from you. Then we need to also, so that's between point A and point B. Point B is your company, where you bring these things into. So between the company and the customer, within the company, there are some costs that you have to consider too. The cost of your, paying your staff, paying your rent, the cost of every other thing involved in generating, to be able to render that service, even fuel, generator, electricity, and every other thing involved. We need to consider those things. And you let us know that whatever we are going to use longer than a month or a year, we should break down the costs. We should not just put everything into one item, so that we understand the percentage of that cost that will enter into what we are selling. Then at that point, we will know the total cost. Then we should also consider what it will cost us to take it from our own company or our own business to the hand of the customer. At this point, we need to consider advertisement costs too, marketing costs, and all those other costs, which many times we don't even pay attention to. I hope I'm correct, Mr. Adeyemi. I hope my conclusion is correct. Oh no, I'm meeting the wrong person.
Yes, ma'am. You are very correct, ma'am.
All right. So I'm just trying to summarize what you have said, that when we are considering our cost, we should look at it from 3 different angles. From where we bought it and it got to us, all the costs involved. In our own company, that's the second stage, all the costs involved. Then all the costs that is involved between us and the person that will buy it from us. We should consider all those costs. And by the time we consider all those things, it will help us to know what our final cost will be by the time we divide it by the units of what we are selling. And somebody may want to ask a question that, okay, after making this, summarizing all these costs and, and finding unit costs, my own unit cost is way larger than my competitors. So what should I do? And I just want you to know that at that point, you will know that if you used to sell maybe 10 before, at this point, you know that 10 will not bring you that profit at that price. So you may have to increase the units that you are going to sell, so that you have to increase your marketing, increase your capacity. You may even need to inject more cash to be able to buy more units, so that it will be able to cover. I hope I'm communicating the right thing, Mr. Adeyemi. Can you please answer, to what I've said so far?
Okay, yes, ma'am. So what the person can do is to increase what the person is buying, so that you will be able to spread your costs. Aside from increasing the quantity, the person can also look for another market. Look for another market that can accommodate, because if you are buying 10 and someone else is buying 100, there is what we call economies of scale. The person will have a reduced cost.
Yes.
That means you won't be able to sell in the same market as that person.
Yes.
I will not leave something of 300 and come and buy your own 500. It's either you also increase the quantity you are buying, or you go and look for a fresh market that person has not penetrated into.
Wow. Up your own, you call it an economy of scale. Is it
Economies of scale?
SCALE or
economies? ECO and SCALE. Economies of scale.
SCALE,
scale.
Yes, economy. That means the person needs to scale our business to be able to buy more, so that our own unit cost will reduce, right?
Yes, ma'am.
Right?
Yes, ma'am.
Okay. So I'm sure all of us were listening. And the truth about business is that there's a lot of dynamics about it. So that you cannot do business blindly. You cannot say we did not study business education when I was in school, and you just go and hit the market blindly. The way you rush in is the way you will rush out. And we need to continually develop ourselves as business owners, because I discovered that business owners, we just feel we have arrived. We are CEOs. There's no need to pay anybody for any additional service. And by the time some of us are saying, okay, learn more, pay a token here and there, and it becomes like we are stressing people, and it shouldn't be. Because the more you know, the more you will be successful. There was in 2016, I encountered the owner of LoopCon. And by the time he told me as a then that he was still a student in Harvard Business School, that he was about to graduate then. And you will not know that these people are always learning. So sometimes we just think that they just get successful overnight. It's a continuous learning process. They don't give up. They may not shout that they are graduating. You may not know, but please, we should know it today. The secret to increase, you need to learn in order to earn. And I'm saying this because I'm going to call you again for another training, and you will have to oblige. And this time around, it's not going to be free, because I just want us all to do well. Because when we do well, the world goes around and around and around, and everybody's happy. So that the next time, that by the time COVID-19 is gone, we can probably go to Dubai for the next business owners boot camp meeting. All right, so let me give the floor to Mrs. Adenaike. You can talk now, please.
Thank you very much. I already typed my questions anyway, but let me say it now since I've been given the floor to speak. Now, you was talking about when you increase your what is it called, cost, that might end up sending a lot of your customers away. But I have had two people say things like when they had problem of space, they had to increase their fees, increase the cost of their product. And at the end of the day, a lot of people left and they still made more profit. Now, isn't that better? Because it was saying that if you increase your what's it called, your cost too much, people will leave. Isn't it better? And then you now have your desired target audience, as in the clients, the people that are willing to pay for your goods and services. Don't you think it's better that way? Because I'm thinking in that line about as regards the business I'm doing.
Mr. Adeyemi, please let me just drop a comment before you, our guru, you finalize it. What we are saying is that you are not, from what he has explained to us, the cost of what you are selling is not for you in a way to determine. There are so many things that are involved. We are just saying that pay attention to everything that is involved in you getting that thing to that, from the point of maybe buying raw material to manufacturing, till between when you started this journey till it gets to the hand of your customer, either goods or service. Consider all the costs involved. So that's what we say you should consider. So it's not like we are saying that just had money, because sometimes even by the time you consider all your costs without even adding any profit margin at all, it's already very high. That's what we are saying. So we're not even saying that make it on your own, your profit should be so high. We're even saying sometimes you've not even added profit at all. Your cost is even more than someone who already added profit. Because that's when Mr. Adeyemi spoke about economy of scale. They were able to scale up their business. Maybe they are buying directly from China and they buy like 1,000 or 1,000,000 units, and they made it for them at 30 naira. You just bought maybe 10 pieces as an SME, and you are already buying at maybe 500 naira per one. So your costs, even without adding any profit, is way more higher than, their own. So what we are saying is that at this point, when you check your costs, even without adding profit yet, and it's really, really, really high, you have to do one or two things. Is either you look for more money to add to your business, to scale up. And that's why he spoke about economy of scale. Scale your business up so that you can play on the same field with that same person that brings it in at 30 naira. Or you go and look for a different market. For example, maybe the person selling at 30 naira is selling in Lagos and it's all over the internet, and everybody knows it's 30 naira, but you may decide to choose another market. Maybe people who are not even on internet at all. May I tell you that it's not everybody that is on internet yet. Maybe you now have to take your own goods and service to a place where, they don't have that opportunity to access those 30 naira goods, so that you can sell your own at 600, and they will appreciate that this person came all the way. So because she came all the way, we are able to buy from her. So Mr. Adeyemi, can you please clarify if I'm giving the right response, and if there's any other thing to add for Mrs. Adenaike?
I think I'm getting a question from another perspective.
All right.
I from what I can see in the chat, I think she wanted to talk about price, not cost.
Okay.
She wanted to talk about increasing your price. I can remember I said you don't increase your price too much so that your customers don't leave. So it is not healthy for a business.
I was talking about price. I didn't know I was talking about cost.
I understand your question, ma'am. Yes, ma'am. Okay. So you cannot increase your price anyhow as a business. And I think I gave an illustration. I said, if you want to be increasing your price, there must be something called product differentiation. There must be something unique about your products. That is what can help you to increase your price and you still retain a sizable number of your customers. For example, now, if you are the only one around your area selling it, if you increase the price, obviously a few will leave, many will still remain. But around the same location, let me use POS as an example. If you step out of your house, you will see almost like 5-6 POS businesses surrounding you. If everybody is charging 30 naira per 1,000, and if you decide to be charging 50 naira per 1,000, people will not come to your side unless there is something different you are offering them. Maybe you are giving them new notes or you are just offering something different. That is what can make them to still come, despite the fact that your price is high. Are you with me, man? So if you are increasing your price, number one, ensure there is product differentiation. Then number two, watch out what your competitors are doing. It's very essential. If your competitors are dropping price, at the time that you are increasing price, there will be a problem. But if you are the only one selling that item around, if you are just one or two, then you can do that. So aside from product differentiation, another reason for you to increase your price, if it is extremely necessary, I always advise businesses, don't drop your quality because you don't want to increase price. If there is increase in the cost of your inputs, and that necessitates you to increase price, you have to do it. Because at the end of the day, people prefer quality to quantity. I checked out a restaurant, a bread making business, and the bread owner was telling me that cost of flour has increased, cost of sugar has increased, so they had to increase their bread from 300 to 400. And I asked her, are people still buying? She said, yes, they are still buying. Why? Everybody understands that the increment is reasonable. But if your cost increases and you don't want to increase your price, you now drop quality, people will leave. So don't reduce your quality because you don't want to increase price. If it is necessary for you to increase your price, increase it. And after increasing your price, make sure there is product differentiation, something that differentiates you from others, that despite the increase in your price, we still want to make people to come back. I hope I've answered your question, ma'am.
Yes, you have. Thank you very much.
Okay, you're welcome. Over to you, ma'am. Okay, let me see.
Thank you so much, sir, for answering our question. I want to believe there is no more question because I can't see any hand up or any question in the chat. And I want to sincerely say thank you to you for giving us this amazing time to spend with you, learning from you. And it's so much fun to learn accounting from gurus like you, because when some people teach you accounting, in fact, at the end of the session, you'll be looking for maybe paracetamol or something to use because your head will just want to break. But you have made it so easy to understand, so easy to digest, so easy to use. And we are very grateful. So on behalf of myself and the organizer of this program and everyone, participants, want to say thank you so, so much. It's a privilege to learn from you, and we know that our businesses are growing stronger, and we will be able to afford to take it to any country of the world very soon because our businesses will do so well. We know that training and research and training is allowable, isn't it, in business? So before you say that we should not spend business money, we'll go and do training and research in another place.
Okay.
All right, thank you so much. So we want to say thank you to you. We can't say it enough. Thank you for the knowledge you have passed to us, and we'll definitely do well by using it. So I want to say thank you to all the participants. Thank you for coming. Thank you for being part of this. We'll always invite you for different trainings. So please make sure you are part of it so that your business can grow. It's very important, because when your business is healthy, you are happier. Thank you so much. And I would like to call on Mrs. Abika. I don't know if she's there. Mrs. Abika, can you unmute yourself and give vote of thanks again? I don't want to hear your voice.
Good afternoon, everyone. Sorry I haven't been able to make all the other sessions, but I'm so happy. I thank God I was able to join today. This is an amazing platform. I've been really busy, but what I got today for the 40 minutes I was on was very helpful. There's a lot of things I'm going to implement in my own shop at home and in other businesses that I have. So I just want to say thank you so much again, Sa and Ma, for having this opportunity for us today. And we just pray to Almighty Allah, pray to Almighty God, that He continues to be with all of us in our businesses and to really help us overcome this COVID-19 so that we can have this in person. I miss seeing everybody. Thank you.
Thank you so much. So we have come to the end of today's meeting. So have a great day or evening where you are. God bless you all. Bye for now.